If I buy 100 shares of a stock, the last thing I'm going to do is just let them sit there in my account for 10, 20, 30 years, hoping I make some money. I immediately put those shares to work with something called a covered call and collect weekly or monthly premium income from those shares. In today's video, I'm going to share with you guys a live example of how to set this up for yourself. And if you drop a comment down below, you're going to get my full Ark Options Strategy guide where we combine 5 sources of premium income into one simple strategy that you can do in an hour a week. But let's go over the shoulder and talk about it, guys. So the first and foremost thing that we need to do before we run this strategy is we need 100 shares of a stock, all right, or an ETF, or whatever it's going to be. So usually I would say you should buy 100 shares of a stock that you believe in when it's kind of on a downtrend. And one that I'm watching a lot right now is Fiverr. Some of you guys that follow along with the public portfolio, you can see my broker statements at onlypeterpru.com as well as optionsellerschool.com. I strive to be as transparent as possible here with everything. But you'll know that if I do this strategy, it's called a buy right, where I essentially buy 100 shares. I already own 100 shares of a company. I immediately put them shares to work. So let's just use Fiverr for our example today because it's a company I am very bullish on. I think it's been getting, it had a very nice run, but now it's getting back on my radar to jump into cash secured puts on, trading below some key 200 and 300-day moving averages as well. So for me, when I do some basic technical analysis, now we're not going to be talking about that right now. I just want you guys to see that if you own 100 shares of stock, you could be doing this strategy. And if you're not, I don't know, you're just leaving free cash on the table. And you're going to see what I mean by that. Obviously, everything involves risk, especially what I'm going to share with you guys. But you're going to see you define those risks. You are in full control of the driver's seat here, right? So, for example, let's say we went out there right now, and just for simple math, let's just say you bought 100 shares of Fiverr for $22, right? So you gave the market $2,200, right? And you bought them and you're setting them in your Robinhood account, right? And what do you do? Well, most people, what I did for years, I just let them things sit there. I didn't do anything with them. I was just sitting there, and then maybe a year goes by. Okay, let's see where we're at. Where would we be if we did that with Fiverr? What you're about to learn, and so much there's other frameworks here on the channel that we talk about, will change the way you invest forever. It will change the way you look at the stock market forever. It is a strategy that I have dedicated now a good portion of my life to trying to educate people. And I literally talk my friends, family, and I will my kids' ears off with this. If I held Fiverr here for a year, where would I be? Let's say I bought it around 22 here, or 30. Or 34, 31, 35, right? Then maybe we bought some right here. Where would you be? You'd be nowhere. You'd actually probably have lost money holding stock. But did you know that if you're holding stock, 100 shares of a stock, or 2, 3, 4, 5 thousands of stocks, all along the way, you could be collecting rent. You could do it weekly or you could do it monthly. If you're a beginner, we're just going to talk about monthlies, but you could do this weekly to have bigger gains. A little bit more risk. We'll cover all the risks and stuff associated with that. Okay. Most people, that's what they do. They buy and hold. Now, I'm not somebody that's going to tell you high yield savings account, T-bills, buy and hold is a bad thing. I do all of those things myself. But the strategy you're about to see, I am focused on income. I'm focused on making money. I'm focused on running a business here. And the purpose of my business is to get in and out of shares, collect rent, and I treat this like a freaking real estate portfolio. You're going to see all that, how this works. So let's say we went out there and bought 100 shares. Of Fiverr at $2,200. We got 100 shares now with a cost basis of 22. Okay. Now what we're going to do is we're going to go to the trade Fiverr options. We're not options buyers, right? You've probably never heard of what I'm about to tell you. A lot of you maybe tune in daily. You have, because you're part of the Premium Chaser fam. Welcome, right? Hit the like, hit the subscribe button, right? Drop your comments, engage with the video. That's how you can show some love, right? But what we're going to do is we're going to click sell a call. Now, all I'm saying is I'm willing to sell my 100 shares. That's it. That's all we're saying. I'm willing to sell my 100 shares. Now I get to define the terms. What's the date I'd want to sell my 100 shares? I'll say November 29th, 29 days from now. Okay. I'm willing to sell my 100 shares in 29 days. Okay. Now I get to name my price. What price do I want to sell my 100 shares at? Okay. Would I be cool selling them at 24? 25? I bought them at 22. I think 25 is a nice little number. Okay. We'll dive into this all in a second. Okay, perfect. Let's just see what we can get here. Okay, Perfect. All right, we can get about 80 if we look at our bid, right? The bid ask spread right here. We're just going to say, for simplicity, we'll just say 80, but you most likely, right, will get around the market price. Usually I like to change this number to be somewhere in the middle. So I would do like, I would do that and collect just about $100 of premium. Okay. Usually you get filled in the middle between your bid ask spread. If you want to get filled automatically, you could just do the bid, right? So with that said, right, you could see I would collect just about $100 of premium. Now, I always like to put everything in my trade logs, into my calculators to keep myself very, very organized. And you can get all of this stuff completely for free. Second link in the description of today's video. Okay. And you also get the full Ark Options Strategy training that's about an hour and a half to 2 hours long. I really want to educate you guys on this strategy that I've developed here for myself, taking the wheel strategy to the next level. Right. So going over to my covered call calculator here, I am collecting $100 of premium. Now, this premium, you might be thinking, well, where is this coming from, Pete? This sounds crazy, right? Well, this is coming from an options buyer, right? You've probably been an options buyer before. I know I have, and I've lost a ton of money, right? That premium that you pay to control 100 shares of stock, where do you think that's going? That's going to the sellers, right? Welcome to the option selling world of things. Welcome. Make sure you are subscribed to the channel because that's literally all we talk about here every single day, right? And we do not deviate into degeneracy, right? We focus on compounding. We focus on long-term wealth building. So if you're here, welcome. Okay. So what I'm collecting is $100. I had my cost basis was 22. We said we bought 100 shares for a cost basis of $22, and we're willing to sell our shares for 25. Now let me zoom in here because this might be a little bit hard to see. If it's hard for me to see, I'm sure it's hard for you to see. So here is what the whole trade looks like. That's our trade. We have defined everything. We've defined the date. We've defined what price we're willing to share. We named our terms. Okay, so we're saying we're willing to sell our shares at 25. Our premium return is a 4.55%. What is that? That is simply our premium, $100 of premium that we collected divided by $2,200. I treat this 22, that's $2,200, right? 22 times 100, that's just the way it is. One options contract is equal 100 shares. I treat it like cash. I don't care what it is. That's $2,200. It could be Fiverr, it could be AMD, it could be SoFi, it could be whatever it is. It's $2,200, and your boy needs to go put that thing to work. Okay. So I'm getting a 4.55% return on my collateral here, return on my shares. That is fantastic. If you don't think that is, you're a lunatic. I'm sorry. You are absolutely a lunatic if you don't think that. This is high risk territory. And we're going to talk about that in just a moment here. Okay. Now, with that said, right, if we end up selling our shares in 29 days, we'll collect an additional $300 in profit, right? That's the difference between what we're willing to sell them for at 25 and 22 for a total profit of $400, right? If we sell our shares for 300 plus our premium, that's $400 for an 18% return max profit on this trade. Let's kind of make this full circle because there's things you got to know, okay? Number one, let's say the 21st rolls around at close, right? And Fiverr is still trading around 22, 23, 24, anything under 25. Well, guess what? It didn't hit 25, right? That means that you are not selling your shares because it's not trading at 25. So your 100 shares that are returned back to you, and you run the play again the next month and collect some premium. I like to call it rent. I literally that's the easiest way I can explain it to people. It's, obviously it's not necessarily a real rent check. It's a premium check, right? Now, let's say on the 21st, you open your phone, right? And okay, cool. My shares aren't sold. I can now open another contract for the following month and collect more premium. Okay. The second thing that can happen, this is the big risk. Let's say you open your phone up on the 21st and you're like, okay, crap, man, Fiverr ran. It's at like $27 right now. Well, guess what? Your shares will no longer be in your account. You will now have $2,500 in your account, right? Because you sold your shares at 25, right? You are missing out on any of those further gains, right? If it's trading at 26, 27, 28, 29, 30, infinity, you are selling your shares at 25 that you bought at 22. Now, is that a risk that you're willing to take? You're going to have to speak to a financial advisor, fam. You're going to have to figure that out for yourself. You're going to have to figure those risks out for yourself. For me personally, I take those risks. I take those risks every day. Why do I take those risks every day? Because I treat this like a business. Gains are gains, and I'm going to sleep just fine at night. If I bought shares a month ago at 22 and I sold them at 25 a month later, and I collected 4.55% in addition to me selling my shares, damn well going to be happy about it. And you can see I have a live portfolio here on the channel. And you can see I have a live one here. This is Fidelity. I primarily use Fidelity over Robinhood. I do like to use Robinhood here on the channel because it's a lot more easy to look at. Okay. But I like Fidelity for a lot of the income streams that I collect from it. Again, click the second link in the description of today's video. Watch this training. Dedicate 2 hours of your day today, and I'll give you all these calculators. I'm going to teach you how to use all these things, right? And then you can actually walk away with them and start implementing this. This will shift your mindset on the markets. But for here, I have a Kraft Heinz call, right? So what is this? I own 100 shares of Kraft Heinz, right? I own 100 shares of Kraft Heinz. You could see that. Right here, I have 100 shares, and I'm selling a covered call on them that expires on October 31st. Right now, at the time of me recording this video, right, Kraft Heinz is trading around 25.30, 25.34. Right now, what can happen on October 31st for me? Well, saying I'm willing to sell for 27. If it's trading at 27 or above, I'm selling them at 27 and my shares will no longer be here, right? I won't see them anymore. I'll be giving the cash into my account, okay? Now, if on the 31st, it's trading below, I don't have to sell my shares, right? And I simply rent them out again. You could see this by looking at my trade log here, right? You could see I have my Kraft Heinz here. I collected $50 of premium for just under a 2% ROI on collateral. Now, here's the thing you have to understand. When you're shooting for the 3-4% ROI on your collateral, you have a less chance of the outcome happening. It's just the way it is. You're taking on risks of selling your shares here. That's just how the reality of the situation. You're taking that on that risk, right? So if you're going for like usually a 1 to 2%, there's obviously still risk there. But what I found is if I stick to good quality companies that I want to hold anyway, and a little kicker here, you learned this on the training down below, right, is I like to do this on dividend paying stocks, all right? Because when I do them on dividend paying stocks, not only am I collecting monthly premiums, I'm collecting dividends as well, and I'm collecting appreciation sales. And I haven't even scratched the surface of the other income streams that you collect with this Ark Options Strategy that I call, right? That I've taken the wheel strategy to the next level. So if you want my trade log, you want all this goodness for yourselves, click that second link in the description of today's video. You have a 2-hour training of the Ark Options Strategy on how to use all these tools, and then you can actually walk away with them and start implementing. Guys, I hope you have a fantastic rest of your day. And remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.